Okay, so I haven't done one of these videos in a little bit of time, but here we are. It's the weekend. I've got a little bit of time on my hands, and we're going to be talking about something a little bit different. Before we get into the charts, we're going to go over what you see on the screen, which is your life is just your days added up, and that's it. There's no big moment coming to save you. And in trading, there is not a single trade that's going to make you. Essentially, as human beings, we are the sum of our days, and so is your trading account. Now, we're going to go over a question that actually really matters, and that's the question you see on the screen, which is, did today's habits, the actions you took, contribute to the life you actually want to build? Not this year, not this month, just today. Did today move the needle forward for you towards the trader you're actually trying to become? The answer to this is very binary. It's either a yes or it's a no, because a no repeated enough times is how accounts, dreams, and traders actually die. And the problem here is that most traders just never notice it happening. The reality is that nobody becomes great as a trader or anything else in one day. That's not the game we're playing. That's too short. The way you become a better trader, a better human being, a better father, a better husband, wife, and so forth, is over hundreds of days stacked up on top of each other, one on top of the last one. The reality is very simple. I work with a lot of traders with Effexify. I worked with a lot of traders in my life, and the traders that look talented to you, well, they weren't gifted in any way. They just stacked a lot of good days, much more than you, and that was their mechanism. That's it. They just kept it simple. One good day, one good day, one good day. By the time you know it, you have a good month, a good week, a good year, a good life. So I'm going to give you a little bit of an analogy here. The best way to do this is to treat every single day like a little brick, like you're building something, a house, a pyramid, a castle. And the way you do that is by waiting for A+ setups, taking small paper cut losses, following your process. Those things are bricks laid. If you force it, if you chase it, if you're breaking your own rules, that's not a neutral day. That's a hole in the wall. As you see on the screen, there's two holes. Those are the holes in the wall. And they mean that you didn't stand still. You're actually going backwards. Now, if you run the math over a year of good days isn't a little bit better. It's a different trader entirely. But here's the catch. You can't see it while it's happening. It's pretty much invisible, right up until it's not. And then people might ask, how did you get so good at trading so fast? Well, you didn't. You just kept laying the right bricks while everyone else was looking for shortcuts. So what we ought to do is stop asking the big question, like, will I make it as a trader? We need to drop that because you can't control that and it just stresses you out. And ask the small questions instead, the one you can actually answer. Did today contribute to my goal? Is it a brick or is it a hole? Answer that honestly throughout your day and at the end of every single day, and the big question is going to answer itself. Now, in my school community, I've got a saying that goes like this: wait, stock, strike. And I built my whole system around that. It allows me to put one brick at a time, and that's my whole game. Now, I hope this made sense, and what we're going to do next is recap my trading day for Friday, the 21st of August, trading the Nasdaq. And I want to show you exactly how I'm laying my bricks. All right, here we are. 5-minute chart, Nasdaq, Friday, 21st of August. You can see all of my trades on the screen. I've actually taken 10 trades on Friday on the Nasdaq, of which, well, I had 6 wins and 4 losses. The 4 losses are 1, 2, 3, and to the dot. This one sucked. 4. It just tagged me out. My stop loss hit. Look at that, by almost a pip. My stop loss hit, and the market went straight to take profit. A little bit of context before we get going. If you watched any of my videos or follow me in any way, you'll know that I'm very directional and I use a custom indicator that prints a line in the sand for me. That's this here, and I'm short biased below that level. You can see that on this little indicator down here. It's the same thing. It says the day POC is sell mode. My recommended stop loss is 33.4 pips. My recommended take profit is 172.2. Now, I only didn't run this one to take profit. It would have hit. It would have definitely hit. It would have hit down here. But I closed it, and that was an end to my day because I've achieved my profit target. A little more context is I operate on a daily loss limit and have a daily minimum profit target. A little bit of context on the profit target is this. If my profit target is, let's say, $1,000 or $500 or $100, let's just stay with the latter, which is 100. If I exceed that by $20, for example, and now my profit is 120, my high watermark stop loss goes to 100 or thereabout, and I'm allowed to trade with the $20 if the market is giving me momentum. You can learn more about that in my school community. You can join completely for free, but even if you upgrade to premium, it's like $25 a month, paid over a year, so $300. But you get everything. The course, I mean everything. So anyway, here's the day. The day kicks off, and I do share to my members in Telegram. I do tell them that, look, the market, let me snip this for you. The market just can't seem to make a lower low. Look at this. So this market is very bullish. Very bullish. Right until here. So New York opens up right there. So New York opens on this candle, but I wasn't waiting for New York. So you can see here, the market is going up. I am in sell only mode. So I'm not looking to buy, no matter how beautiful this looked towards the upside. And I made a lot of money doing this on gold the other day, but my POC was down here on gold. So I was buying. Irrelevant. The market forms a double top here, and I take a sell position. A little late. I should have tagged it here at this grid level right there. Stop loss. The market then finds a little bit of a support where at the current daily high, you can see these yellow lines, I'm mapping extensions of the daily high. They're very important for me, this here too, right? So we'll come to that in a second. So as the market comes here, I take another short, starts working out, I take another short, stop loss, stop loss. That's when I say, okay, chill, wait for the next pattern, because this pattern failed. Then we find support at the previous daily high. We go above the current daily high, and we hit this once. We come down. We form, so we come down and we form our last higher low. Then pattern, double top. Then we breach below the current or the previous daily high, extension of the line here, and then we extend here. So we double tap this. So this is a double top, A+ setup. The moment we go below this, you can also see my dots indicator here, W0. This is an extension towards the downside. I start shorting. I start adding here, adding here. I add here. The market goes up, tags me out, and goes down straight to TP, and I get out of one here manually. Because I've exceeded my daily target, I made very good money buying gold, which I'm going to cover later, not now. And that was it. So let's cover the market in its overalls. Let's delete everything first. So here, I act on the first indication of a move, which is a potential pattern. You don't know it's a pattern. You have to take the risk. Double top, take it. Here, we have a resistance. We have a daily high that's extended. You can see the line right there, which we hit into, and I thought, okay, maybe there's a resistance, so I take short. That doesn't work. Then we establish another daily high. You can see how the daily high creates a line. And that was my trigger here. That's what I started shorting into. The trigger to start shorting was the reclaiming of the daily high. We are in sell mode, but we had an A+ setup here, which is a double top. The market then tanked very aggressively, extremely quickly. If you blink, you miss it. 224 points, even more, 290 points almost towards the downside. But you can see here, look at this. This is the current daily bottom. You see, Asia opens up. I hit my take profits. I was holding on to this trade. Price went below. The moment it came above that daily low, I said, I'm out. Now, if I was looking to buy, this would have been a beautiful setup because I have a pattern, which is a reversed head and shoulders, where right at the current or previous daily low. That would have been an A+ buy. I could have bought this towards the upside, 195 points, the moment it broke the grid. But I don't break my rules because that would be a hole in the wall. It would allow me to make more mistakes, break more rules in the future. I stopped doing that. I made a lot of money and lost a hell of a lot of money by breaking my own rules. I said enough is enough. These are my rules. I focus on my rules. I trade my rules. And ever since then, I've been just so relaxed, and it's magical. Anyway, I want to invite you one more time to join my school community. You can join the free or paid versions, but I recommend going free. See if I'm really giving you value for free. And if I am, and you like it, and you want to learn my system and get my indicators, scale up. If not, it's all good. Anyway, have a good weekend. Thank you so much, and I'll see you soon.